Computer. Okay. Hi, everyone. This is Sasha Hodder, and we're on the HODLcast with Kara Haas, the Tether investigator extraordinaire on Twitter lately. And yeah, we're just going to basically go through everything going on with Tether. Kara has some great insights. And if you didn't catch my episode with Kara in the past, we discussed the Bitmain IPO. But Kara, maybe you can just give a quick overview of your educational background and your accounting background, and then we'll get into it with Tether.
Certainly, that sounds great. And I'm a CPA. Got my CPA license back in 2003. Mainly worked in the field of audit. Have done some tax for a while. A lot with technology. A lot of point of sale systems, payments. Really got into studying cryptocurrency around 2014, have followed it ever since. And in the past year, it's been particularly exciting with the introduction of stable coins, and that being subject to or the most interest of a potential audit, or we'll go through what an attestation is, which is currently the language that we seem to be using in the field. So out of hobby, I just started watching the Tether flow on the Omni channel and started taking screenshots and tweeting about different wallet balances and how it flowed through to the transparency report. And here I am. It's now a hobby that turned into a habit that I can't stop now. So I have now become, the Tether watcher.
Yeah. All right. Well, for anyone that doesn't know too much about Tether, can you give us a little background? Like you and I were talking beforehand, it has long been speculated that Tether was responsible for some of Bitcoin's rise last fall. Can you explain, like, how does Tether work with Bitcoin, and how do stable coins work in general?
Certainly. So the main thing is that stablecoin and Tether was the first and arguably the largest. And so they did.
What's their market cap?
I don't know.
It's huge.
They slid into number 7 recently, I believe.
Mm-hmm.
They're well, maybe just under 2 billion. Okay. I think. I haven't looked to see if there was any change in those that are in circulation, but they bumped somebody out. The whole market cap of the top 10 has changed considerably in the past couple of days. It's been interesting with the recent crash, I guess we can call it. But I think they're definitely in the top 10. I think they're number 7, and the main reason we need a stable coin is it's difficult to transact and trade using fiat in the cryptocurrency markets and exchanges. So Tether was created, and for a long time it was surmised, but now it's definitely out there that it's very related exchange to Bitfinex, and they're one of the top
like
exchanges
the same owner. Or something
same group, definitely related parties between both, and I think it's now since been openly acknowledged that it is. For quite some time people were debating, but Tether was born out of prior coins that Bitfinex had after they had a hack. I think they had a couple hacks.
Okay.
And then in order to do like a societal loss to cover the hack, they created Tether. And then I think it was at that time, and there are far better scholars on this than I am, but it was at that time where there was the opportunity to convert the debt into equity shares of Bitfinex. And so that's ultimately how the two are definitely related. So a lot of the original people involved with Tether became equity shareholders in Bitfinex.
Okay.
And there was an audit or proposed audit back in third or fourth quarter of 2017 with Friedman, an accounting firm. And that ended up, and this is kind of how I got pulled back into this whole market is it wasn't an audit, and too many people on Twitter were saying it was, and in blog posts and things like that. And what it ultimately was that Friedman did not issue any kind of opinion. Most audits, or any audit, you either have an unqualified opinion, which means the financial statements are free from material misstatement, so that they're fair, and that anybody making investment decisions, that they're free from any kind of errors, and that they would help you make an informed choice, an informed investment decision. What it ended up, and if there's a qualified opinion, then that means they're fair, but there might be a transaction that they're concerned about, or what you'll see a lot of times with companies is they're insolvent, and they would be a going concern. So that would be a qualified opinion.
Okay.
But in a consulting arrangement, which is what Friedman ended up being, there's no opinion issued. They don't necessarily need to be independent. They're mainly giving guidance on how the trial balance or the chart of accounts should be set up, perhaps tying to a bank statement, and that's about it. Okay. That there's really not much else involved there. So that's all that really came out of that memo, and then that's when they disengaged. And at the time, I think it was Tether definitely being the first, that nobody in the market really knew how involved an audit could be. Mm-hmm. And everybody wants an answer now. I mean, crypto, we see, we got it, everything's instant with technology. So I think there was probably that issue. Audits are also very expensive. And auditors take on a lot of liability in issuing opinions, and a lot of risk. So they tend to be very expensive. So I'm sure a lot of that was at play. And then there was a lot of pressure on them throughout the whole first half of 2018. And then that's when the law firm, Louis Freeh's law firm, they came in, and they're attorneys, so they can't actually perform any kind of CPA audit, right? But they did come in and look at the books and offered up as a memo that the cash was there, and
what does that mean for Tether if the cash is there? Like, the tokens are there and the cash is there, but they're not actually linked together in any way. So maybe at one spot in time the cash is there, the next day the cash could be transferred to anyone. So do you think it matters that the cash was there at that time?
You raise a really good issue, and that's the thing. I mean, they certainly could have, and that's what I think most critics are raising, that issue, is that they could very well have been invested in other projects, ICOs, different transactions to raise a bunch of cash. Mm-hmm. And they could have sold a bunch of cryptocurrency, padded their bank account,
and then move it right back into crypto,
and then move it back in after. Mm-hmm. And even though the law firm said they didn't tell them what day it was or anything like that, nonetheless, you know it's coming.
Just an odd choice to do it by a law firm, not an accountant. For sure. Like, what went through their mind to be like,
Well, and I think too the thing, because CPA, accounting and law, we sometimes do intersect. But the beauty of attorneys is that in this situation they would be able to act more as an advisor, whereas with the CPA we have to be independent. I mean, if I were a part of the engagement, I wouldn't be able to own Tether. I would say any of the major cryptos at this point, you're running a risk, even with Bitcoin, since there is suspicion of market influence and things like that. But particularly like an actual project that you're working on, there's no way that you could own that cryptocurrency because you wouldn't be independent. It would benefit you for that price to go up. So, that's definitely been an issue. And because it gained such wide acceptance so early on and people kept using it, there's really no incentive for them to have the audit. I mean, if they can still be successful, and nobody's technically questioning them, other than a few skeptics, then they just keep going. And the problem is that even if it started out with best intentions and then there were errors, you've got to keep fixing those errors. And the problem with Tether in particular is they've never been able to maintain banking and a banking relationship, which we know is common in crypto, that there are issues. But with Tether in particular, the problem I think happened is that they were able to transact by circumventing banks. I mean, they had to find a way. And so that became their go-to way to do it. And the way that they could do that is marry up to potential investors. So if you wanted to buy Bitcoin, you would come to me and say, I want to buy 10 million worth of Bitcoin. And I have $10 million. And I would say, okay, if I'm Tether, hang on to that 10 million, but just set it aside for me. And then
now, do they need some kind of like separately managed account to put that aside, or how do they trust the person to put it aside?
Well, when you don't have a bank, you don't really have a choice.
Yeah.
So I think, maybe their own, I don't know the degree of know your customer that they do, or how compliant they are with that type of thing. But I think they had to have done that for a while because they were without a bank after Wells Fargo let go of them. Then they were with Noble in Puerto Rico, and Noble was insolvent.
I've heard some horror stories with Noble.
And so they had to leave Noble. And then they went with Deltec. And the problem with
I've never heard of Deltec.
So
that sounds like a big multinational, or where is it located?
I believe it's in the Bahamas. It's definitely Cayman Islands. I believe the Bahamas it's in, but it is allegedly tied to some prior money laundering cases, a big one out of Venezuela and a really big one out of Brazil. Now, they've all since denied, but the problem is that everybody's put all this pressure on them.
So the person would put their $10 million with Deltec, and Tether would say, hold on to that.
Oh, no, that would be if you transact without a bank. So, and let's assume a bank relationship. So they're banking with Deltec. And so it would transact the same way any other stablecoin happens. So they would deposit the money in Deltec, 10 million, and then Tether would issue 10 million tethers to you.
So are they issuing new tokens every time they do that, or they're trading?
It would come off of Bitfinex. My bad. Yeah.
Okay.
So Tether Treasury only issues to Bitfinex, and Bitfinex supplies all the exchanges. Okay. So it would either come from, if you're trading on Bitfinex, or if you're trading on Binance, then it would come from Binance.
Okay.
And
Binance would have got it from Bitfinex.
From Bitfinex.
Okay.
All the transactions of tethers going to the exchanges comes out of Bitfinex, and all the money coming back in. So a lot, when you do follow me on Twitter, all my poking fun at usually Bitfinex's wallet, Treasury, and Binance. A little bit of Poloniex, but they're pulling from Bitfinex. And when Bitfinex Tether supply gets low, it pulls from Treasury.
Okay.
And for a while,
and we don't know if anyone's got dollars backing when they issue the Treasury. That's like one of the
that's the main suspicion and the main question at hand. And so with all the and Bitfinex, I have had the opportunity to at least engage with a couple of Bitfinex shareholders. Even seen like the Bitfinex spokesperson talk through a couple Twitter threads that they do want to comply and they do want to have an audit. And
if they wanted an audit, they would have an audit.
What they're definitely claiming at this point is that no audit firm wants to touch them.
Oh.
So I can definitely see that
too,
point, because it's really what they would need to do is they would need to hire someone like me. Like they would need to hire an accounting firm to get their books ready for an audit.
Yeah.
I mean, they couldn't just straight up have an audit at this point. I think it's just gone on too long. Mm-hmm. And I don't know where this actually, plays at this point. It seems to me in the past couple of days, though, they've given up on wanting an audit because they've taken it down from their website, that language, that it's auditable. They haven't changed their white paper. I haven't looked at the terms of service and I don't know how long, but now they have up there what's called the professional verification is what they're having. So I'm guessing that means a law firm or somebody would do it.
Someone they paid off.
Right. There's the potential for that. Mm-hmm. And so I think the biggest concern at this point, really personally for me, you either believe Tether and Bitfinex are solvent and everything works the way it's supposed to, or you don't. And for the most part, people who have their opinions of it are solidified in it. So it's one of those situations where the way it's supposed to work is that for every Tether or stable coin that's issued, there's supposed to be $1 held in reserve in a separate account. Like Tether should have its own bank account separate from Bitfinex. And the only thing that moves that balance is a token coming in or out.
Mm-hmm. And so why does the balance go, if it's supposed to be $1, how come some days it's like down to 93 or 104 or?
So their attempt then, Bitfinex and some of the other exchanges and the market makers, will be to use arbitrage, and they're very open about saying that's the intent of it, to restore peg, for it to be 1-to-1. But regardless of what it's trading for, it should be $1 Like Tether, in theory, I don't even think it would matter if that balance fluctuated up or down. If that was Bitfinex's job, they could essentially deal with that. Mm-hmm. But you can't be arbitraging client trust funds, like things held in reserve. You can't be doing that. Yeah. So any of the new stable coins that have entered the market, their whole claim is that these are held in cash reserves, and it will never be less than the number in circulation. Mm-hmm. So that's the main claim as to what it should be. There's doubt and suspicion, in particular with Tether, because in an effort to continually prove their solvency, they've listed some of their cold wallets, and those cold wallets for quite some time tended to be exactly or very close to the balance of Tether, like the number of Tethers that are in circulation, which would lead one to think maybe there's not two separate bank accounts, that only the money that is held in Bitfinex is what they have, and that equals the number of tethers in circulation. So there's doubt there.
And how can fiat dollars be displayed in a cold storage wallet?
They can't, and that's the other issue. It's not US dollars, it's Bitcoin, Ethereum, and EOS. And we've seen how
quickly that
can go away.
Falling knife.
Right, exactly. Those that people are trying to catch. Mm-hmm. So that's really the issue at hand. And it doesn't look good for them when they can't. I've stayed out of the Reddit threads, and I typically don't read any of that stuff. I mean, I really just between Twitter and Omni Explorer, I'm fascinated to watch the movement of tethers right now and all the exchanges. To me, what's most fascinating is to watch these exchanges, how they're going to unload their tethers. Mm-hmm. Because when you list a coin, and Tether in particular in the early days, some of the bigger exchanges took on, like Binance before I left the house was 568 million tethers in cold storage and about another 125 in their hot wallet, which technically somebody could argue belongs to the traders, mm-hmm. To the customers. But that's an awful lot of tethers. Mm-hmm. And so if the exchanges doubt the sustainability of Tether, at this point, it's a race to the bottom.
Or if they are issuing their own and see a profit in having their own stable coin, then they'd also want to get out of their position in Tether. Like if Binance issues a stable coin, they're not going to want to keep 525 million Tether in gold. So if they sell that all at once and Tether doesn't have the money to support it, and every exchange did that all together, then they would go down.
And that's where we're running into the problem right now, I think. I think that's a lot of what came to a head in the past couple of weeks is, and with Tether in their banking hop, is that a whole bunch of customers that they weren't planning on wanting to redeem their tethers, mm-hmm. wanted to redeem their tethers.
And if their Bitcoin has gone down, like say they had a 10,000 price point, if they're not holding it in US dollars, then now they've got half the dollars for every tether or something.
Right, and is a problem to begin with. I mean, the whole initial claim as it is that we're not going to hold your money in crypto, we're going to hold it a US dollar.
Yeah.
And so without having a bank and without potentially not having the money, they came out and said, we're going to tack on a 3% withdrawal fee.
When did they do that?
They did that probably a couple of weeks ago.
Okay.
I think it's been at least 2 weeks that they tacked on the 3%. And personally, to me, that seemed like an effort to deter. It was, I think, transactions over 1 million mm-hmm. to withdraw. But to me, that seemed like a decent way to deter people from wanting to withdraw, stay in and mm-hmm. trade. Mm-hmm. Or what happens, they can convert to Bitcoin, so buy Bitcoin, and then off-ramp on Coinbase or some other ramp that will, in an exchange that doesn't trade Tether. Mm-hmm. I think Kraken will let you cash out in USD, maybe.
Gemini will too.
Gemini is one.
I don't know if Kraken does.
Maybe not Kraken. I know Kraken definitely has Tether, but I'm not sure if they'll cash out in mm-hmm. fiat. But what happens then is you have exchanges that only permit trading with Tether and exchanges that will cash out in fiat, and you end up with a risk premium between Tether and US dollars. And that risk premium has been, today I saw it go up over 5% again, which means the price of Bitcoin on the Tether exchanges is like 5 to 7% greater than on the non-Tether exchanges like GDAX and Coinbase. So it might be like 3,400, which I don't even know what the price is right now.
I think it's gone back up to like 4,500 or so.
Oh, okay. So it might be like 4,500 on Coinbase, and it would be like 4,700 on Bitfinex or Bitstamp, or one of the Tether exchanges, Binance, where you can't off-ramp in US dollars. So that premium really is telling with who's trying to cash out and when.
Yeah.
So between that and the withdrawal fee, it's kind of almost artificially.
That would be an upward pressure on Bitcoin every time they sell Tether if they have to buy Bitcoin.
It is. Oh, it's good for Bitcoin. It's definitely good for Bitcoin. It's bad for people who want to cash out because you're forced to cash out at a lower rate.
Yeah.
But yet at the same time, do you want, if I am a trader and I want to exit, do I want to run the risk of paying 3% and not being certain I'm going to get my money or not from Bitfinex? Or do I want to cash out less on Coinbase? And that's a 5% fee. You're getting less money for your Bitcoin, but you're getting out, and you're actually getting your cash. So that's what's kind of keeping that risk premium is people making that decision. Wow. So the real issue at this point, I personally think, I mean, whether audit, no audit, the introduction of these other stable coins is actually helping these exchanges that are holding Tether. They're figuring out how they can exit Tether because they don't want to just be left with 500 million Tether. And Bitfinex, if Bitfinex is insolvent, they're not going to pay them the money. And then you've got some choices. I mean, there's the potential. I mean, there's security issues if security is compromised and there's a hack. I mean, that definitely. I think the environment right now is ripe for that because people are trying to cut corners and people really, if they doubt Tether, they really want out. So what I've started to watch is what the exchanges are going to do. And it seems to me Poloniex has, and Binance came out today. Binance came out with a stable coin basket. So how that's going to work right now, they're supposed to give us more details. But how I see that working is you're going to deposit your Circle coin to me because I allow Circle trading pairs. And I'm going to put your Circle coin in my whole big basket of stable coins. And my Tethers are in here too. And so now I can start to move those out behind
They're
the
going to
scenes.
sell their own 525,000 into this basket and leave the individuals holding the...
Absolutely. I think
it's just like the mortgage-backed securities.
It is very much like that. It's like Weight Watchers Advanced drops 600 million Tethers by the holidays plan. Yeah, that's what it's looking like. It's only been out since this morning. More details to follow.
What person is going to... I know that people will buy it. People that are new to this, they're like, oh, I'm a little risk averse. I want to get into that cryptocurrency stuff. What can I buy? Oh, a basket of stable coins that has zero risk.
Yes. I'm holding a big basket of stable coins.
It's all back 1-to-1 US dollars.
And it only took me 3 hours to figure out how to get these. Oh, and what now? I don't even have my private key. It's now held on an exchange. Fantastic.
An exchange that has just also recently come out saying like they don't intend to comply with any U.S. laws because they are going to continue being they're moving to the path of decentralized. So they think that they have a strategy where they're going to have offices in different areas of the world. So anyone trying to sue Binance is going to have a really difficult time actually getting to it because of how they've structured. Yeah, there's a really good article by, actually, I think he's your friend, Lawmaster.
Oh,
I see him on the chat.
Okay,
yeah, he wrote an amazing, or he shared an amazing article on Binance that went through all of their plan to be able to list any kind of coin.
So, I have not kept up with that, and I definitely I need to. Oh, I do remember a few people commenting on it. So he's a great follow.
I agree.
He used to work for did research early on for Dyer newsletter.
Okay, yeah.
And then
Dyer's great too. He introduced me to them because he put out an article that showed how much government spending had been in each area. Like the IRS by far spent more on their blockchain analysis or research than the SEC or CFTC or the Department of Justice. But Dyer put it out and he shared it with this whole, pie chart of what the government was doing in terms of blockchain surveillance. And it was really interesting to me because we haven't seen anything from the IRS yet. Exactly. We've got one notice and no action other than the Coinbase thing we know about from last year, but they're like spending 38% of all the government money, and the SEC's was at like 2.3%. So it's
really?
like,
oh my goodness.
Yeah.
Well, and it is. I mean, it's true. You just don't see that, and so much of it has been crowdsourced knowledge. And resources, but he does some great drill down, and he works for the block now, and has come up with a lot of really interesting research. They really do put out some good stuff through there, but I do have to check that out because I am fascinated. I mean, in particular with Binance, of how they are going to get rid of all these tethers, and I think the CEO
That's exactly
is
how.
brilliant.
Let's do a basket and give it to each of the person that buys the basket. Let's give them some tether.
Well, and I think they started by trying to reduce their position through trading pairs. I'm not a trader, so
what would happen if they just bulk sold it out tonight?
The price of tether would be
tether would be at like 40 cents,
my gosh.
And it would display that there's maybe not the funding to pay it out.
I don't even know would they have the demand. Like, I don't even know that the demand could meet such a low price of tether. But that definitely could be the case. And I don't think that it's been clear. All the heads of the exchanges know that whatever move they make, if it's that dramatic, it's going to crash the market far further than what they've done so far. So I think they were all successfully testing,
like colluding to just slowly get out of it.
Either that, or it's almost like, to me, watching it seems like a competitive chess game. I think. So Poloniex has Circle, the USDC coin. So that coin and Poloniex are related. And Poloniex, and they've got a lot of interesting related parties as well. I mean, Circle USDC is backed by Bitmain. Baidu, is it? Baidu. The Chinese internet.
Chinese Google.
Yeah. They're a part of it, a couple Chinese banks. So they've introduced this stable coin that I think actually started with institutional investors back in like May or June. I think the announcement came out earlier that they were using it, but they recently introduced it to the market. But Poloniex had like 220 million tethers earlier this year, and they're down close to 100 million now, I think. And I don't understand trading. I rely on a lot of my Twitter followers to help me with that. But
So you should take the tone-based class with me in a
exactly.
couple
There
weeks.
we go. So I learned some
Yeah.
of the trading techniques and understand what they're doing. But I think they slowly let go of their tethers to trading pairs, would be my suspicion.
Yeah.
But Binance, I don't think has time to do it. So they had to come up with a stablecoin basket. Like, I think it's a slow strategy. I've heard you've got to be patient in watching the market. It's not really market timing. I mean, bots. They set up bots to be able to do it based on the ratio 60-40, 40-60, however the trading pair does it.
What wallet is it that you're often putting the screenshots of the
So my main ones are Bitfinex's wallet, and then if I'm ever poking fun, and I truly am just poking fun. I mean, it's all right there on the blockchain.
Yeah.
I mean, for the 12 people who read my tweet and get it, yeah.
If you don't follow Kara's Twitter @DivideBy9, it's like one of the best accounts out there, I'd say.
My main ones that I watch are Binance's hot wallet and its interaction with its cold wallet. I'm particularly intrigued by the cold wallet because there seems to be numerology involved. There's a lot of
crazy eights.
Yes, I've really become quite accustomed to a lot of eights. I feel like I'm taking back to childhood and playing crazy eights, but a lot of triple eights, a lot of triple ones, a few triple sixes, and then.
So that'll be, what is if they put a 666, that's like how many coins they're selling at one time?
Oh, yeah. So usually and it's only started in October.
Okay.
But it might be like 80 million, 111,888.
Okay.
Tethers that they're not selling, that they're moving to a hot wallet.
Okay.
So for their traders. So they're taking it out of the cold storage, the amount of tethers they own on their exchange, and then they're putting it into a hot wallet. And the assumption should be made that their traders are demanding 80 million more tethers. Really what happens is when the hot wallet reduces down to like 20,000 or 20 million, the cold wallet will move. Okay. And that's the same thing that happens between Treasury and Bitfinex. If Bitfinex's supply is too high, then the Treasury will pull it off the market. And we saw that quite a bit over the past few months. It's only been recent that the tides have changed and there's been a demand for tethers back out in circulation.
Now, do you think that has anything to do with institutional buying, or?
Personally, I don't. Lot. So
that's what, there was a recent debate, actually, Lawmaster.
Yes.
What, did you see that with Jake? Like they were calling, he said that he thought, Jake Chavinsky,
yes,
said he thought there were institutional buyers, and then Lawmaster was like, well, where's your proof of this? And they just kind of went back and forth on it.
And I didn't get to follow. There's so much to follow, and you get so frustrated because everybody's got such great insights. But I've recently had that debate with Andy from the Henry Rain Show.
Okay. Is he Goldbug?
He's Goldbug.
Okay, yeah.
And definitely a shout out to him because he's the only one who has been able to teach me anything remotely close to understanding trading in any regard. I'm like, Andy, can you explain the whole gold silver trading strategy to me again? But he and I'll have a debate because he definitely thinks it's institutional buying too. Okay. I personally do not. I don't think Lawmaster does either.
No, he does not think it's institutional.
So the reason I don't think it is because of the Bitcoin whale movement wallets, or the Bitcoin whale movements, off of exchanges. What anybody who believes institutional buying is happening, they're thinking that that's moving off and going to be sold in the over-the-counter to institutional investors. completely my own opinion and observation, obviously, and I'm never confirmed or denied until after everything happens.
Yeah.
But I think it's being moved off while the price runs up, and then that money will be liquidated.
Mm-hmm.
Like, it's in a position, and by moving it off, it's creating scarcity, helping raise the price as well.
Mm-hmm.
And you don't see that many.
And when you say, just to clarify, when we're saying moving it off, we're talking about like moving from Binance to like a Trezor wallet.
It's mainly right, or some wallet address that's not an exchange address. Like, it's not actively being traded.
Mm-hmm.
And when you and you've noticed, I've tweeted some of them.
Mm-hmm.
And again, I'm usually most intrigued by ones that have some interesting number combination to them. And so those wallets right before Thanksgiving, I think like around November 20th, there were at least 40,000 in Bitcoin moved off. And you started to see it being moved off the exchanges. I don't know what the activity was today, but I don't know how much institutional buying actually happened today and where the price is at. But I don't think that it's institutional buyers buying it. I think everybody planned on them coming in and buying. But I don't see it. Yeah, it could happen.
It would be nice in a sense, like, to think, oh, they're coming in, because then it gives good confidence that if they're in, they'll probably do something to drive the price up over time. Not that we don't, I think the price is just going to go up over time because there's a scarcity of it, and hopefully, it goes up in the next couple of years. But if the run up in the fall was largely due to Tether, maybe we're just rebalanced to where the supply and demand is supposed to be.
Where it should be at this point. I mean, so there definitely could be that argument. There's obviously not conclusive evidence. In some of my just kind of wallet watching and working through different things, I mean, one of my things that I would love to see perfected is the demand proxy that they used in the Tether study. But, it was new and just trying to get that out. And I think that'll evolve with time too, with research. But
what was the demand proxy?
Just customer like US dollars, like how many people, dollar to dollar, like 1-to-1.
Okay.
Where I think a better proxy for demand would be to somehow be able to test all the data we have from the exchanges and the exchange pulls and sends. And technology's at a point now where we can definitely get that data and kind of come up with some kind of variable that shows based on the exchange activity what the real demand is. But whether you believe it or not, what caused the price run up, I think people were more hopeful that it would obviously continue. I don't see it happening until there's actually exchange audits and some kind of fair establishment of a market. And we didn't really touch on, I feel like I've drilled audits home over the course of the past month, but I forget that we haven't touched on it here. But the main thing is, in the stable coin market right now, everybody's talking about an attestation. And technically, that's all the customers, token holders, are entitled to. Knowledge that their token is backed by $1 US. So that's been what Gemini, TrueUSD, Circle, Paxos, any that are backed by $1, that's what they have. They have an accounting firm performing an attestation where they're looking at the cash reserves, they're looking at the token balance.
And is it cash reserves over a period of time or on a set date?
It would be on a set date whenever they do it, but their testing and their procedures, they're testing the whole month.
Okay. Do you think they're more reliable than Tether?
Oh, for sure.
Okay.
I mean, they definitely are. I mean, and I feel comfortable saying that because, I mean, that is actually, I mean, accountants do have procedures that they need to go through. Yeah. And they have too much liability for it to not be. They will do very similar procedures to an audit where they're seeing if they're doing confirmations to third party to make sure that that money isn't promised to somebody else. Similar to what you see in like mortgages.
Okay.
Like making sure that there's not a second lien holder on it. Because what would happen if it was, and that's what any critic's issue of Tether is if two people are promised $1 US and they both want that $1 US at the same time, and everybody makes the argument that the US government does it too and banks do it, and they do. But you can't solve the problem with the same problem. Yeah. And this is my issue with stable coins on exchanges, is that if you allow margin trading, then you're essentially creating that same environment again, where you're fractionally reserving, you're loaning out money and creating an environment where 2 people or 3 people can have promise to the same token. The thing with an attestation is it doesn't look at the entire entity as a whole and all the financial statements, which token holders aren't equity holders. I've said it countless times. They technically don't have a right to that audit, but I definitely believe that audit should still happen. Because when you have the case of Tether and Bitfinex related, Circle and Poloniex that are related entities, everything may be fine right now with their process, but I would suspect and I would hope that Grant Thornton or some other audit firm is auditing the entire set of books of Circle or the entire set of books of Poloniex. Because in an attestation, if you're only looking at cash, over time, if you are in a situation where you need to meet a debt or you're over leveraged, the temptation to use accounts receivable and a revenue account in order to raise funds to make a debt payment, it's just too tempting to use a related party and it always starts out, you just want to borrow those funds. Just this month to make it happen. People do it with sales tax compliance, with payroll taxes. They're just going to borrow that reserve and they'll make it up next month. So the temptation is there. And so I'm leery of just an attestation when you have a stable coin and a related exchange. Because it's too easy for them to trade pairs, have inside knowledge, have market makers, do margin lending. It's too tempting to manipulate things. And the possibility of creating more in circulation, I think, still exists. Unless you have a coin that definitely has an agreement with the exchange, you will not do margin lending with this. But then what stops? Everybody wants to be interoperable and be able to transfer their tokens exchange to exchange. So what stops that exchange from, or that trader from taking it to like F coin, where you can do wash trading, which the way they call it trans fee mining, where on the exchange, I'm Fcoin. You want to make a trade, so you're going to pay me a fee in Bitcoin, and then I'm going to say it's 0.01%. Then I'm going to refund your fee in Fcoin, my own exchange coin. I'm giving to you. So now you can trade with yourself or another party and create that idea of increased volume to attract all these people who don't know better.
Yeah.
And that's also what causes the price of Bitcoin to go up. You're creating the illusion of liquidity and volume. So people are coming in, and you are just going back and forth. And now as an exchange, I've made a lot of Bitcoin by you just trading with yourself all day.
Because you're paying a percent to you for every
percent to me. I'm giving you.
You know, I was shocked. Like when I was getting ready for that legal course I did the weekend before last, I was going through like the SEC's Ether Delta steps and showing. I just wanted to show who the top exchanges were and I was going through what is required to be able to sell a security token. And when I came across the top exchanges, they were all ones I'd never heard of, other than Binance up at number 1.
Sure.
Like Poloniex was at like 22. You know, it was like they were these weird exchanges that are just they're just like trading. I'm sure that all they're doing is wash trading. Otherwise, I don't know. Maybe.
Well, Tether, and
the volumes on them were extremely high.
Oh yeah, and on CoinMarketCap, you'll see 3 asterisks, and it'll indicate trans fee mining, and they don't even calculate it into the volume.
Oh, okay.
Yeah. Trans fee mining is what definitely burned me. Like that was my moment in crypto where I'm like, I'm better off on the sidelines as a observer, because that to me just signaled this entire market has the potential to be completely manipulated. And these projects that were in such a hurry to get their token to market and get it to an exchange, and they couldn't get listed on an exchange anymore, and they decided, they couldn't do an ICO, so they would just do a mass airdrop and then encourage everybody to run to a trans fee mining exchange to bid their price up to like 6 cents. It's insane.
By trading with themselves.
Essentially, that's what happened. That's what happened. And those were the only exchanges that would list this stuff on it, besides your decentralized exchanges, which those have a liquidity challenge, of course. And that's, of course, the whole purpose of stable coins is to provide, not have that friction. But I personally think that we're poised to see worse here. I hate to be
you say it so cordially. We're poised to see worse. It's gonna get ugly.
Yeah, I think it definitely is. I don't see it getting better until all the tethers are gone. Or it gets resolved. I guess that's a better way to put it. Till the tether situation is resolved. I think for the most part, most people, I would think, I've stayed away from it. I mean, I've literally only watched stable coins. Because to me, it's fascinating how all these related parties now have a vested interest in.
So when you say related parties in Tether, you're talking.
So in Tether, it's
every exchange that owns them right now.
Yeah, every exchange that owns them, but mainly Tether and Bitfinex and all the related banking entities and their related parties that they need to rely on for either banking or transactions. That's mainly what I mean for them. With Circle and Poloniex,
I'm interested to, I mean, they've got Bitmain in there who's got stake in the game, and some of these other companies that are positioned to benefit or have a significant loss if their project fails. So when you introduce that, it's in their best interest, of course, for the same issue that we had with Bitmain and Bitcoin Cash, and the hash war and ABC, and whenever you have that big of a player in the market, obviously they want something to be done with Binance and Tether. I think CZ is brilliant. I mean, I think he is absolutely. So as much as I poke fun on my Twitter account, I mean, I definitely think he is absolutely fascinating to watch and a mastermind. But I know he's not going to go quietly with these tethers, and he's got a plan. And it's going to be interesting to watch the stablecoin basket for sure.
Mm-hmm.
And now that you say too, like, try to sue me, go for it.
Yeah.
Same is true. I would think he's got his banking, all lined up, and I mean, he's got his ducks in order in the way he wants them.
Mm-hmm.
So I think it's good. I hope the best for the stablecoin market. It was definitely not how I saw myself ending up in crypto as just the stablecoin girl, and making sure that everybody uses the right audit and accounting terminology when it comes to stable coins was not exactly what I envisioned was going to happen with crypto. But I'm here, and it's working out.
And to me, it looks like one of the only ones that is really paying this close of attention to it. So I think you're doing everyone a service to kind of point out some of the challenges we're about to face.
Well, and I think that's what's most helpful, and it's definitely what did it for me is a group of traders, and then some other participants in the field, whether they used to be traders, maybe they may trade equities now, or small business owners, their interest in accounting and in audit in particular, because when it did come out that all of a sudden, Gemini is going to have a audit, and then there's no audit standards, and they're getting in all these arguments. I mean, they kind of all said, hey, explain to us exactly what this is. So it's been fascinating to me to watch the industry evolve and to have people interested in the information. Mm-hmm. And I'm not here to I mean, literally this wallet watching is my own entertainment and fascination, and I'm just sharing it on Twitter. But it's not that anything is accusatory or that there's anything wrong. My concern with some people is that they're so adamant and gung-ho on whether it be crypto or leaving the institutions that have wronged them, that they are immediately giving their trust to somebody else. And my goal is to just provide a couple questions just to give you pause of, is this how it should work? And just question some of the projects or what's happening in the industry before they decide to part with their money.
That's good advice. All right. Well, we kind of said where people can find you. What is?
Oh, for sure. Twitter's the best. Divide by 9, all spelled out. That's really my main social media account that I participate on. And I try to blog, but
you write amazing blogs. But
I like that you do, so that I can be like, oh, read this. I'm just going to take care of this tweet.
No, her blogs are phenomenal. Okay, well, thank you so much.
Definitely.
I really appreciate your time. I learned a lot about, I always hear this stuff about Tether. I was seeing your tweets, but it really helps to just get a kind of deep dive into the situation. And it'll be really interesting to see it's not going to be fun to watch it.
Yeah, it's not really fun. It's more a learning.
Yeah.
I mean, I act as if it's fun, just because I'm entertained because I've been watching it for so long.
And if I don't have any money in Tether, but if we did, it would not really be fun at all.
Yeah, my goal is to inform anybody who does, or
probably we're not giving investment advice, but giving just information that you might consider before.
For sure. And if anybody has questions, to ask me on Twitter, I'm more than happy to answer.
Thanks, Kara.
Yeah, definitely.
Okay, bye everyone.